Right, let's start off with the US earnings because most companies beat expectations while others did slightly disappoint, especially on the revenue front. But although we did see most companies beating expectations, markets were relatively subdued last week, but also keeping in mind that the Dow did breach that key 10,000 level.
I think that markets have not been quite as strong as you would expect from the earnings. So earnings reports came in very strong for the banking sector. It came in strong for the tech sector as well, Amazon and Microsoft, as you mentioned. But the market as a whole still didn't really move. And I think that what it means is that there's a huge amount of expectation wrapped into current prices. To just stick with where the market is now, the results have to come in very strong. The other two things that did happen, though, is we had some fairly weak economic reports, and we also had lots of controversy about pay. Now, markets don't like the controversy, so maybe when the controversy about bankers' pay is out of the way, the market will move up again a bit more.
Well, some of the banking stocks also disappointed on the earnings front, but on the other end, we had the Nasdaq really enjoying gains last week, and the tech stocks seem to be the shining stars during these tough times. Is it about cost cutting, or do you think they really are seeing the demand picture improve?
I think that there are some company-specific issues. So the launch of Windows 7 for Microsoft is a huge issue. It's had very good reviews, and they launched it last week, and there's lots of optimism about that. So Microsoft, which has been a lagging stock for a while, seems to be coming into its own again. And then, of course, what happens with lots of these stocks is they can manage earnings a little bit to some extent. So they can cut back on investments, etc., and kind of, let's say, make sure that they don't underperform. So the tech stocks have been quite strong in terms of earnings because of that.
Festive season in the US and globally, of course, coming up, and we had Walmart announcing very significant cutting measures in terms of prices and a lot of specials out there, if I could call it that. And apparently that is quite a bad omen ahead of the retail festive season. Are you concerned about the US consumer and how they're going to fare this festive season?
I think that those people who are still pinning their hopes on the US consumer leading the world into the next upswing has got a surprise coming. US consumer will stay under pressure for a couple of years to come. And what we are seeing at this point is that there are a lot of specials already coming pre-Christmas, which we used to have post-Christmas. So it does mean that retailers are seeing some weakness in demand. And what we are seeing also in the economic numbers is there's still a lot of stimulus needed. So any withdrawal of stimulus at this point would be far too early.
Looking at South Africa now, actually let's start off with the oil price because that's been quite interesting, and it has breached that key $80 a barrel as well. And this has all got to do with the fact that we think a recovery is looming. We've also got US crude inventories coming down quite significantly. I mean, what's going on with the likes of the oil price when you just told me that the US consumer obviously still under pressure, but the oil market is really pricing in quite a nice recovery by the consumers globally?
Well, the one thing that we have seen that is very significant for the oil price is Chinese growth. So Chinese growth have been extremely strong. The other thing that we have seen is that we've seen oil for a very long time around the 65 to 75 range, and it's broken clearly out of that range. So that means that somewhere in the world there is some significant growth. Otherwise, we wouldn't have seen that kind of demand for oil.
And of course, just looking at the South African picture, obviously a very strong rand offsetting the likes of a higher oil price, which means we probably won't be getting a very high petrol price hike. But just looking at that strong rand, because are you concerned about these levels? Because the rand obviously has been slightly within a range, especially last week, and it did show signs of slight weakness.
There seems to have been a rumor going around that the government may be changing its stance on not interfering in the rand's value. We've been concerned about a too strong rand for a very long time. We think that a strong rand is very bad for the South African economy, and a stable, competitive rand is what we need to get, especially industrial production going in South Africa. So we've been advocating much stronger intervention in the currency market for a very long time.
So basically, Wikus, what you're saying is you would actually support a non-free floated rand at this stage?
A much dirtier float, yes. We should be accumulating reserves at these levels, and we shouldn't really allow the rand to become much stronger than 9 rand to the dollar.
But surely from a foreign investor perspective, that wouldn't be a very good thing, because we know China doesn't have a free floated currency, and that doesn't bode well for them because it always comes up.
It does come up, but you see huge amounts of foreign investment into China, exactly because they know that they will have a competitive platform to invest from. So speculators love the free float because they know that the government won't actually stop them taking significant profits. The moment that you actually take the free float away, you get more long-term investment and less speculation. So that's exactly what we want.
Well, there was a lot of speculation last week that government would be doing something like this, but of course government came out and denied everything. But we've got the medium-term budget policy statements set to be released tomorrow, and there was a lot of concern about shifts in policy, and especially shifts in policy towards the left.
Yes, Mr. Gordon is not really part of that shift to the left. He's come out strongly actually in support of the free float, so Mr. Gordon is not the one who wants to get rid of the free float. And I think that we'll see a very responsible statement. Mr. Gordon is also an astute politician, so I think he'll use this first opportunity for a major policy statement to really put his own stake in the ground.
Because just very quickly, how are you playing the markets right now? We've got the South African market over 26,000 and very key level, in fact, very close to 27,000. We're at 26,802 points at this stage. We were up 0.25% on Friday. Are you buying at these levels?
We are buying offshore equities rather than South African equities because we think that the rand is too strong. We think that the rand will weaken at some stage, or needs to weaken somewhere. In the next 2 years or so, it needs to weaken substantially. But we feel that with the Federal Reserve out there creating liquidity like there's no tomorrow, we think that markets, it would be very brave to bet against markets going up over the next year.